Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Wall Street has its worst day since the August meltdown as growth worries fuel a flight from risk. Japan's Nikkei slides more than 3.5%, with US and European futures also firmly in the red. Nvidia's record rout worries over AI and a US antitrust probe wiped $279 billion from the chip makers. Value is the biggest one-day loss in American stock market history. Plus, Ukraine's president reinforces a call for air defense systems following one of the deadliest strikes since the beginning of Russia's war. We bring you the details. So a flashback to the beginning of August with a sell-off pronounced in the US and expectations that will continue into the session today, with European futures pointing lower by a full 1 percentage point. It was the semiconductors, it was Nvidia that felt the full force of the rout yesterday in the US session. Nvidia closing lower by almost 10%. Some calls from analysts, but also the DOJ probe into that company. We will bring you the details, of course, throughout the show. FTSE 100 futures pointing lower by 67 points. We continue to monitor what's happening in commodities, and we'll bring you a check of oil shortly. S&P futures then pointing to further losses, having dropped around 2% yesterday. The Nasdaq, by the way, the worst start to a September since 2002. Again, Nasdaq futures pointing lower by 145 points, lower by 0.8%. Let's flip the board and look cross-asset. There was a move into Treasuries, yields drop. That has stabilized somewhat in the session today, 385 on the 2-year. The Japanese yen seeing strength again in terms of some of the upside. Currently at 145, you're hearing again from BOJ officials suggesting that they will move rates higher when the conditions are met. Euro-dollar at 110. We're hearing from ECB officials as well. Kazakhs from the governor of Latvia, that central bank, suggesting that September is very much in play from his point of view in terms of the next move lower in terms of rates from the ECB. That meeting September the 12th. Brent, $73 a barrel, down 0.5%. Concerns again around oversupply in this oil market. WTI, by the way, back with a 6 handle, back below $70 a barrel. Let's cross over to Asia right now. Avril Hong standing by in Singapore for a check of the markets and the rout that we're seeing, particularly in terms of the semiconductors and Japan. Avril.
Absolutely. We're seeing a steep sell-off with tech and the chip names bearing the brunt of the selling. And it is widespread across the region. The infotech sector is the one that is declining by the most. We are seeing echoes of August in terms of size and scope of the sell-off. We haven't seen a day this bad since the crash last month. And this is, of course, against the backdrop of those concerns triggered by the Nvidia selling, that this AI narrative and rally has gone too far, too fast. So you have on the TAIEX earlier in the session declining by about 5%. The key drags were these chip names, but a couple of other things I wanted to highlight as well, even as we see these declines, because remember, in the depths of the August sell-off, part of the concerns was the shock that we're seeing on the Japanese currency. And indeed, as we see the yen firm from 147 to 145, it kind of makes you wonder, and it can't be helping the Nikkei 225. So a bit of a double whammy for Japanese equities. The other thing I wanted to highlight is how mainland equities in the depths of the August sell-off was a relative outperformer. The idea that maybe, there's so much selling that's gone on, maybe there's not much left to go, but also that for some of these Chinese equities, they've just been so disconnected from global macro trends. So keep that in mind even as we see the sell-off today. Flip the board and give you a sense of the extent of the selling on some of these chip names. The ones that are really bearing the brunt of it is TSMC, SK Hynix. These are the direct suppliers. The Bloomberg Gauge of Asia chip names are seeing the biggest bleed since August and to the lowest since the crash. Let's flip the board again because I wanted to offer you this perspective. As we see the declines in these chip names, something worth highlighting is the forward PE ratios for these stocks, as they've actually trended towards the 10-year average. So some of our strategists have actually pointed out that, hey, maybe maybe these Asia chip names are not that expensive. The other idea surrounding this, as we see them fall, is that they have fallen much more compared to their US peers. So this could also point to signs of them potentially bottoming out. Tom.
Avery Hong in Singapore with the ramifications, of course, across the Asia markets. Let's get more analysis right now because, of course, stocks suffering their worst day in a month yesterday. What a sell-off that we saw, driven by a plunge in Nvidia. The chipmaker lost nearly $280 billion in market value, the biggest drop in history. On the eco front, of course, a US manufacturing gauge contracted for a fifth straight month. Let's unpack all of this and bring in Bloomberg MLive strategist Mark Cranfield standing by with the deep dive. Mark, what was the key catalyst for these markets then? Was it US data? Was the analyst calls around Nvidia? And how sensitive are these markets now to the jobs data as we look ahead to jobs openings today and then non-farm payrolls on Friday?
Yeah, all of the above. And coming back from the Labor Day long weekend, which is traditionally a time when US investors look ahead for the rest of the year, how do we feel about markets going from here? And they will be concerned, particularly when they see the data you was just talking about, that the Federal Reserve is already behind the curve. They're already not doing enough to support a rebound in the US economy. And at the moment, the data is only pointing towards a 25 basis point rate cut instead of a 50 basis point, which the market would probably like to see. So at the moment, so investors are not satisfied. They're not getting enough of a bullish read from the central bank. And at the same time, when they look back at what happened in August, they saw the way the markets rebounded, but they didn't recapture the highs of the year. That's significant to a lot of people. They will say, well, we're not going to buy into this dip this time around because the last one was pretty short-lived. And that is something that will weigh on the market, particularly as we're now in a period where we're going to think a lot more about the presidential elections in the United States, where the outlook looks very uncertain, and why would you want to put a lot of risk to work when you really don't see clearly what's happening in the next few months?
OK, so buying the dip may not come to the fore for some of those reasons. One of the catalysts we touched on was Nvidia, and what a marked drop that we saw in terms of market cap yesterday. $279 billion. The stock down over 3 days, around 14%. We had a couple of analyst calls, including from the team at BlackRock. What do you make of the moves around Nvidia and what it signals about the AI theme?
Well, the very scary thing is if you look at who Nvidia beat to become that biggest one-day sell-off in market cap, it was Meta. If you look back at when it happened, Meta was in the first quarter of 2022. That major sell-off was about 250 billion, I think, worth of market cap. But the problem was it sparked a long downtrend for that stock and for the broader market. So it went on until the fourth quarter of 2022. That was month after month of downturn for tech stocks and for the broader US market. If Nvidia is giving a similar signal, that takes us well through the end of this year and into the first quarter of next year. That could be a headwind for a long time. The conditions are not exactly the same, but people often look back at these major events and think, is there a lesson for me to learn? And this time round, it is not a pretty picture.
Mark, you're seeing a move in terms of years, 1 basis point lower in terms of the front end, 384. It was a much bigger day, of course, in terms of money moves into treasuries yesterday. And corporates taking advantage of this lower rate environment as yields move lower. A big day in terms of issuance. Talk us through what we saw on the corporate front, trying to take advantage of these lower yields.
It's not unusual, again, at the beginning of September. It's that we're into a period of the year between now and the US election. The US election is definitely going to shorten the window for issuing corporate bonds and the Federal Reserve cycle as well. So typically September, October are huge months for corporate issuance, and obviously you want to get in ahead of everybody, because if you can't get your bonds out the door in a limited time span, when investors will get full up of bonds very quickly, you've got to get them out fast. And so that's not unusual to see that volume. In fact, what may happen here is that we really front load the issuance into September, and it goes very quiet thereafter. So expect a lot more of that. Also, they'll be worried about spreads widening. If the economy is slowing a bit worse, a bit faster than people expected, that will blow out corporate spreads. It will make it more expensive. The Federal Reserve may be lowering rates, but that won't help corporates who will have to pay more in terms of their spread over US Treasuries. So you better get your bonds out the way fast.
Okay, really interesting. Spreads have been relatively well behaved, of course, but maybe the tension is building. MLive strategist Mark Cranfield walking us through all the key developments on a big day again for these markets. Mark, thank you. To oil now, extending declines after a loss of almost 5% yesterday. The possibility of political unrest easing in Libya is shifting focus back to plans to boost production by OPEC+. Bloomberg Horizons anchor Jumana Pasechi joins us for the details, to check on these markets and what is driving some of the moves around oil. What stands out to you, Jumana, in terms of the pressure that's coming through? WTI below $70 a barrel. There's a number of factors playing into these oil markets right now.
That's right. And it's not just WTI trading below $70, but the full gains for the year have been wiped out now for Brent complex. They're raising a lot of questions as to what is going on here. A couple of catalysts in terms of data. Early on in the week, we had those weaker than expected China PMI numbers, again, raising concerns about the outlook for demand coming from China. Yesterday, of course, ISM manufacturing in the U.S. surprising to the downside, too. So demand concerns heavily weighing on the oil complex. In addition to that, you had all of the geopolitical developments in the region largely brushed off. You had the stalemate in Libya. Yesterday, it emerged afternoon after an interview that Bloomberg did with the central bank governor, or the former central bank governor of Libya, that some form of agreement is likely to have been reached between the warring factions. Again, that would indicate that the 500,000 barrels per day that had been taken off the market are likely to come back to the market. So further supply pressure coming through there. This, in addition to the IEA estimating that as soon as the first quarter of next year, you could see a surplus of 1 million barrels per day in the first quarter of the year, simply driven by how much supply is hitting the market, not necessarily from OPEC Plus themselves, but from non-OPEC Plus drivers, which has been, again, another big driver for this market to the downside, which means that inventories are going to build up, and that would cap any upside that you're seeing in these prices. In addition to all of that, Tom, you have some of these momentum moves, the CTA players, algorithms getting involved in the move downwards. So that's, again, putting on pressure to the downside. Then you factor in some of the analyst calls. You have the likes of GS and Morgan Stanley from a couple of weeks ago saying that they had revised downwards their estimates to the price of Brent to sub $80 for next year. And others, Citi, JP Morgan, even more negative, saying that Brent could go below $60 or as low as $60 in 2025. And so all of this raises a lot of questions as to what OPEC Plus are going to do, because they're slated to bring back barrels to the market as soon as the fourth quarter. With oil trading as low as it is questionable as to whether or not they can and they have the capacity to do so. There is one single decision maker within OPEC Plus right now, and that is Saudi Arabia. We've spoken about their actual fiscal break-even level being closer to around $100. How much appetite will they have to endure oil trading closer to $70? That is the question for our markets here.
Yeah, have to wonder how much tension there's going to be in the room at that OPEC Plus meeting, given the divisions and prospects of maybe, as you say, $60 barrel Brent in 2025. Comprehensive deep dive on what's moving these oil markets coming through then from Bloomberg's Horizon anchor, Jumana Pasechi. Jumana, thank you. Let's check in on the commodity markets right now. Further pressure again, as we've been talking about, on Brent and WTI, down by around 0.5% on both. 73.38 on Brent, WTI at 69.92. Iron ore currently flat after seeing a rout over the last few days, back below and still firmly below that $100 per tonne level. 93.60, you can link that to the softness in China. Copper also still below that 9,000 level, 8,984, just up 0.3% so far in the session. And gold up 0.1%, getting a modest bid in this risk-off market, 2,494, just below that 2,500 level. Let's check in on what else is set up for your day ahead then, as we think about the data front out of the US, of course. 1:30 p.m. UK time. We're going to get the US trade balance, and that'll be interesting as we look at the manufacturing data that came out yesterday that showed a big drop in terms of the export orders. 3 p.m. UK time, it's the US JOLTS data, so job openings. Bloomberg Economics expects the ratio of vacancies to the unemployed and job hunters to move down to around 1.15 from 1.2. We know this is keenly watched by the Fed in terms of the potential inflationary or disinflationary impacts of a tighter or looser, softer labour market, I should say. 7 p.m. UK time, we're going to get the Fed Beige Book as well, so some more colour coming through from that Fed survey in terms of the state of that economy. Coming up, Ukraine's president calls for more support after a Russian missile leaves over 50 dead and hundreds injured. The latest on that story is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Wednesday. Let's check in on the bond markets because the risk-off moves in equity markets showing flows into bond markets. Treasury's getting a strong bid yesterday. Yields down around 9 basis points on the benchmark. Stabilising to some extent in the session. Yields lower by 1 basis point on the front end on the 2-year. As you can see, 384 right now at the 2-year level. 382 on the 10-year. Markets now pricing in a full 2 percentage points of cuts by the Federal Reserve over the next 12 months. We'll see how that adjusts, of course, on the labour data out later today. JOLTS data out today, and, of course, crucially, the non-farm payrolls on Friday ahead of the Fed meeting on, of course, September the 18th and that decision. So check out the bond markets as we continue to assess this risk-off environment. Now to the geopolitics. Ukrainian President Volodymyr Zelenskyy restating a call for air defence systems after Russian missiles killed more than 50 people in what was one of the deadliest strikes since the Kremlin's invasion began more than 2.5 years ago. We're now joined by Tony Halpin, who leads our coverage of Russia's economy and government. Tony, thanks for joining us. What's the reaction been then in Ukraine to this attack, the consequences of it in terms of lives lost and, of course, the injuries to those impacted?
Yes, good morning, Tom. Well, as you've said, this was one of the most serious attacks on Ukraine since the start of the war, and there have been further missile attacks overnight, in fact, on the western city of Lviv, much further away from Poltava. So Russia is clearly demonstrating that it retains the capacity to launch sustained attacks on Ukraine, and Ukraine is saying that this presents two challenges. First, that they need the promised deliveries of air defences so that they can safeguard their cities and people against these attacks. And secondly, that there's a larger argument that it's all very well to defend against attacks, but they need to be able to strike back at the source, as they would put it, of the attacks on Russian airfields deep inside Russia that are used to launch missiles and to launch planes that carry out these attacks on Ukrainian cities.
Tony, what is we see this push from Ukraine, and we've seen it consistently through this conflict. They want more weaponry and they want the ability to strike harder at Russia. And then you get a corresponding move and agreement months later, often from their allies and those who support them in terms of the hardware and the personnel as well. Where are we in terms of giving Russia or Ukraine the ability to strike further into Russia then, those longer range attacks? Are we getting any closer in Washington, in Europe, on allowing Ukraine to have that ability?
Yes, I mean, this is one of the most pressing debates at the moment, Tom. There's a meeting of Ukraine and its allies in Germany on Friday, and that's bound to be on the agenda. And there's a very clear division. Some allies are nervous about giving carte blanche to Ukraine to strike where it wishes inside Russia. They're fearful of an escalating response from Russia that may eventually end up with some sort of nuclear response. But others are much more gung-ho. They say that the only way for Ukraine to defend itself properly is to go on the attack in this way and to strike at Russia's ability to even launch these attacks. And in that way, they'll raise the pressure on Vladimir Putin to come to the table for some kind of negotiated settlement.
OK, Bloomberg's Tony Halpin joining us with the latest. Tony, sorry to cut you off there, but we appreciate the update, of course, on the evolving situation on the ground in Ukraine. The pressure coming through from President Zelenskyy then and members of his team for those allies of Ukraine to allow Ukraine to have that ability to punch further into Russia. We'll see how that debate, of course, evolves as Ukraine wrestles with the consequences. Coming up, China extending loans of more than $120 billion to African nations through its Belt and Road initiative. But is the finance coming to an end as the economy, of course, of China struggles? We report live from the Forum on China-Africa Cooperation. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, China is one of the biggest sources of finance, of course, for African nations, pouring in more than $120 billion of government-backed loans through its Belt and Road initiative over more than a decade. South Africa's Minister of Agriculture spoke to Bloomberg at the Forum on China-Africa Cooperation that's taking place in Beijing about his hopes of building and expanding opportunities with China.
We are focusing on making sure that we build strong relationships with China, and that at a technical level, our agricultural, our our agricultural products are able to meet the phytosanitary and biosecurity requirements of China, but obviously looking to expand the basket of goods that we are providing to the Chinese market. Currently, we have a large citrus export, a beef export, and we're obviously wanting to add a number of other producers to that. And using the course of the next few days to be able to build those relationships and expand on those opportunities.
Well, Bloomberg's chief North Asia correspondent Stephen Engel is on the ground for us in Beijing at that summit then. More than 40 leaders from African nations on the ground as well, alongside Steve, of course, in Beijing. Steve, this is a different Chinese economy. This is a more constrained Chinese economy. How is that factoring in to what you're seeing on the ground in terms of these conversations and the relationship that China now has with Africa?
Well, there's no doubt that the Chinese economy is suffering right now. They would like to export their excess capacity to developing nations, to places like the African continent, but that's only going to exacerbate some of the trade deficits countries like South Africa have with China. So there's so many different facets to this story because there's the whole geopolitical issue as well with the rising voice globally of the global South, and Africa has a big proponent of that. And what we've seen, obviously, as you just mentioned, China has, through state policy banks like China Development Bank, Export-Import Bank of China, issued about 100 or more than $120 billion worth of loans to various African nations. But that started to trickle off after 2016. And then through the pandemic, it dried to a halt, only coming back out last year to about 4.8 billion. So it's come way off. Why? Well, many nations, obviously, in Africa are in debt crisis or on the verge of a debt crisis. 3 nations at least have defaulted: Zambia, Ghana, and Ethiopia. So they're reassessing, obviously, how far they've been overextended with these loans from China. And China, definitely, with the slowing economy, Tom, is reassessing what they can get out of these investments better going forward, better returns on their investment. Look, you see a number of different stories all across the African continent, whether it's in Kenya with a rail line that just ends. In Nigeria's capital, you also have essentially a light rail that looks incomplete or not even being used. These are mega projects that China has helped finance. But again, these African nations are so indebted, they haven't been able to service their loans, exacerbated, of course, by rising interest rates around the world through the pandemic in the last couple of years and a king dollar. Yep. So there's so many things that these African leaders are coming here to discuss and not necessarily fall into what some have claimed to be a debt trap.
Yeah. Steve Engel, our North Asia correspondent, on the ground for us in Beijing. Steve, thank you. We're going to have more on China's relationship with Africa in this month's edition of Africa Amplified. But up next, we're going to be speaking to the CEO of fintech Zilch. Will they list in London? This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Wall Street has its worst day since the August meltdown. That's as growth worries fuel a flight from risk. Japan's Nikkei slides more than 4%, with US and European futures also firmly in the red. Nvidia's record rout worries over AI, and a US antitrust probe wiped almost $280 billion from the chipmaker's value, the biggest one-day loss in American stock market history. Plus, Goldman Sachs says US GDP faces a 0.5% hit in the second half of next year. That's if Donald Trump wins the presidency. It says a Kamala Harris victory would see a very slight boost to growth. Let's check in on these markets. Firmly risk off then. Flashbacks to the start of August the 5th, of course, when you saw that selling, and you're seeing similar features across these markets right now. European futures looking to build on the losses of around 1% yesterday. European futures pointing lower now by 1.2%. For the context around the Nasdaq, the worst start to a September since 2002 for the Nasdaq. The S&P dropped more than 2%. The Nasdaq dropped more than 3%. The small caps also badly hit. Semiconductors being squeezed. Nvidia falling almost 10%. We'll unpack that story for you in more detail in the next minute or so. FTSE 100 futures pointing lower by 73 points. Bit of stability coming through for the broader commodities market, even as oil remains underwater and under pressure. S&P futures then looking to further losses after the rout of yesterday, down 0.5%. Nasdaq futures looking to build on the losses of yesterday, pointing lower by 134 points. The manufacturing data contracting for a fifth straight month out of the US, raising their concerns about a slowdown in the world's largest economy. Let's flip the board and have a look. Cross-asset money flowed into treasuries, seeing a bit of stability coming through. Yields down just 1 basis point on the front end. On the 2-year, 384 after significant moves into treasuries yesterday. 145 on the Japanese yen. Strength again for the Japanese currency. That is weighing on Japanese equities, up 0.2% so far. The yen versus the US dollar. 110 on the euro. Kazakhs, the governor of the Latvian central bank, saying he would be open to a further cut in September. The ECB meeting on the 12th of September. Brent, $73 a barrel after falling almost 5% yesterday on oversupply concerns. Down 0.4% so far in the session. WTI back below $70 a barrel. Let's return to the Nvidia story right now. Suffered a record single-day rout, as we mentioned yesterday. The company seeing almost $279 billion wiped off its market value, almost $280 billion wiped off its market value during yesterday's trading session, with the drop continuing after hours. Analysts now concerned about how long the sell-off may continue. Take a listen.
High expectation, which also meaning that when the market taking a downturn, there will be higher level of a disappointment. Moving forward for the rest of September, how far the Nvidia's or the AI stock could potentially taking a step backward, I think that will be something that I'm also quite keep my eye on.
I think in this type of market, yes, skittishness, but there is prospect where investors will say, okay, if the demand is still there on AI, prospects for investors to come back.
We still predict that the GPU market is going to grow by 29.9% CAGR over the next 5 years to a market worth 103 billion. So still lots of growth, still lots of upside in this market.
And by 2030, it's going to be close to 1 trillion. Now, 50% of the growth is coming from AI-enabled chips. So the AI is really fueling the industry growth big time.
OK, reaction there to the rout that we saw in Nvidia shares after hours. Further pressure around 2%. We had calls coming through in the session from BlackRock and others, analyst calls suggesting a little bit of concern about the momentum around the AI theme, the potential impact on Nvidia. And then you had the news around this DOJ probe broken by Bloomberg, something we've been working on, the team has been working on in terms of getting the details. And they broke that story yesterday, leading to further pressure after hours. Let's bring in Kriti Gupta right now, anchor, of course, of the opening trade. For the details on this DOJ probe, what do we know at this point, Kriti?
Well, what we know is that the DOJ, the Department of Justice over in the States, has been reaching out to companies, to customers, and saying, look, what has the process been like in interacting with NVIDIA? And, of course, the reviews haven't been great in that this is a company that is pricing things higher, that is making things harder, and then there are barriers to entry in terms of other players trying to get involved. But Tom, I have to say, this is kind of the downside of being a big tech company. The pros, of course, being that your stock is rallying, you make a bunch of money if you're invested in it, you can borrow in the credit markets at almost government level rates. But the downside is, one, there are very high expectations, and also that you're kind of running with the same playbook, and that the expansion is largely driven by tinier acquisitions, whether it comes to things in your supply chain, whether it comes to AI investments, whatever that may be. And NVIDIA has made a string of them in their climb to the top, and that's what's concerning the DOJ. Yeah, because it's not just the hardware. It's not just the GPUs and the AI accelerators. They have the ecosystem. They want to be able to lock their customers into that ecosystem. Yeah. What have NVIDIA been saying in response to this probe, and is there a wider read across for the rest of the semiconductor space, or at least the tech space at this moment? Yeah, so they're cooperating with the probe, of course. I think they would push back on some of the allegations that are being made. No surprise there. But again, when we talk about the broader ecosystem here, this is something that the DOJ often does with big tech companies, by the way, unsuccessfully. And this is important to keep in mind that even though we saw a 9.5% drop in the stock yesterday, some would argue that this isn't actually reflective or a reaction to the DOJ probe, simply because historically, when you do have the FTC, the DOJ, name your regulatory supervisory authority, and that tries to probe big tech, it usually doesn't affect the stock. And the reason being is there's a precedent that goes all the way back to the 1990s when Microsoft dealt with one of the very first antitrust cases against big tech back in the 90s, and the stock would drop at every single legal kind of standpoint and legal hurdle, and investors would kind of trade it around it, but then see right through it simply because these legal proceedings would last anywhere from 3 years or more, and 3 was on the low side for Microsoft. But the criticism there was that at the end of the day, the fundamentals matter. Microsoft ended up winning the case because they added more to the American economy. They're adding more to the ecosystem. And since then, every time a regulatory authority has tried to probe a big tech company, the stock has not traded off of it, maybe until now.
OK, we'll watch how that evolves then. Kriti Gupta with the latest in terms of that DOJ probe. Thank you very much indeed. The consequences for Nvidia and the broader semiconductor space as concerns, of course, mount amongst regulators, at least, around monopoly risks within generative AI. From generative AI to the telecom space right now, just briefly bringing you a redhead crossing the terminal because the telecoms company Telia aiming to reduce headcount by 3,000 positions in 2024. This is reporting that is just coming through. This is likely to impact all units across the telecoms company that, of course, is focused on Scandinavia, largely Telia then, and Eastern Europe as well, looking to save around 2.6 billion in terms of Swedish krona. The stock, by the way, year to date up around 30%. So it's had a relatively strong performance year to date, but looking for further cost savings. And this could lead to a cut in headcount of around 3,000 positions. We'll keep across that story for you and watch, of course, how it moves at the open at 8 a.m. Now, some other stories making the news. Spain will reportedly name José Luis Escrivá, currently the Minister for Digital Affairs, as the new governor of the Bank of Spain. That's according to Expansión, the Spanish newspaper. The government is set to announce the new central bank head later today, ending nearly 3 months of speculation over who will fill the vacancy. And the German government plans to cut its stake in Commerzbank as it seizes on a recent stock rally to speed its exit from the lender it rescued over a decade ago. The country's finance agency, which manages the stake of about 17%, didn't disclose how much it would sell or when. The government is currently holding the stake is currently worth some 2.5 billion euros. Starlink, meanwhile, has backed down and said it will follow an order by Brazil's top court to block access to X. Intriguing. It comes amid Elon Musk's bitter standoff, of course, with the country after Brazil's Supreme Court justice ordered X to be banned as part of his campaign against disinformation. Let's talk fintech now with the CEO of one of Britain's fastest growing startups. Zilch launched in 2020 and already has just over 4 million customers. The company plans to list within the next 2 years and is eyeing either New York or London for its IPO. That is something that is closely watched, of course, by these markets. Very pleased to say I'm joined now by the CEO and co-founder of Zilch, Philip Belamont. Phil, thanks for joining us in the studio. So you have some important updates coming through this week in terms of profitability, in terms of revenues. Where does that leave the business, the standing, as you project out to 2025?
Well, the way we see this is, obviously, it's a big milestone for us. So we turned our first profit, and for a business like ours, we did this in just 4 years. So we're excited about that. But I have to say, I'm just so proud of the team to get to where we got. So if you go back 2 years, the mood music in the market had just completely changed. Capital had dried up, and it was an allocation of capital issue. What do? Do we cut our way to profit, or do we grow our way to profit? And we chose at Zilch to say, let's grow our way there. Let's go innovate and build new product, and let's go grow our way to profit. But of course, this is always a risk. This is a strategy decision. And I'm so pleased that we are here and talking about this today. We're seeing utilization of the scale with customers. They're opening the app every single day. It's created massive upward pressure on the margin. We've grown revenue 100% year over year, and actually now GP 50% year over year. And that's falling to the bottom line.
Do you see that revenue growth? Is that sustainable, that level of revenue growth, as you look into 2025?
We think we can accelerate on that. So this is the thing is, if you've cut your way to profit, which a lot of these companies have, they've had to try and do that. Some of them gone bust in doing that. If you cut your way there, I think that's a problem. It's not sustainable. How do you actually grow moving forward? If you've grown your way there, we think that we've gotten through really the darkest 2 years. It's been really tough. and we can now accelerate off of this. We think we can accelerate that growth rate. So we're excited to see how that doubles and triples from here.
Okay, so the environment around the capital markets and around the deep freeze that we've seen around VCs and funding has eased, but arguably the global economy is looking more fragile. We're seeing that with China, the US, the Eurozone, here in the UK as well. Are you seeing any sensitivity to your consumers, to your users? Are you seeing any changes in habits, changes in buying patterns? Because, of course, you have that linkage, you have that data in terms of how your consumers, how your users are buying and interacting with your merchant partners. How is that evolving?
It's a great point. And look, our model is unique in the sense that we go direct to consumer and we own the relationship directly with that customer. Yeah. We live in your pocket, in your hand. So as you say, we can see everything our customer is doing with the product.
Are they becoming more cautious?
So we have seen a flight of spend from non-discretionary to discretionary, and that was earlier about 2-3 years ago. Mm-hmm. That's completely changed around from discretionary to non-discretionary over the last, I would say, 6 to 9 months. What we've also seen is more of a flight to debit. So we provide a credit debit product all in one. Customers are now spending 25% on Zilch on debit, and that's obviously grown. So we have seen that change.
Okay.
But performance in underlying credit performance looks strong. So we turn the book really quickly. We re-underwrite customers each and every time they use the product.
Are you seeing a pickup in defaults, in delinquencies?
We've actually seen a drop in this. So we are now seeing delinquencies well under 1.5%, and that's the lowest we've ever seen them. So we've actually seen performance very strong, and I think it's this combination of debit, credit, and the ability to use our product, snooze certain loans, and manage your cash flow that allows people to manage their money through this time.
As rates come down, is there more you can do on the rates? You're charging 18.5% APR. Is there more you're looking to do to move that lower?
I think to be clear, and this is an important point that you raise, is if you're a regulated firm, the regulator requires that you show an APR, whether that's a true APR or a representative APR. And so, this is why some BNPL companies don't show APRs, because they're unregulated. So the regulator requires that. What you do is you take your product and you say, should a fee ever be levied on any of these products? What's that average fee divided into that line? And show that as a representative APR. So to be clear, a lot of our customers, 75% plus, don't pay a single fee at all. There is no APR. But for the ones that do, we're less than half of the price of the market average.
Okay.
And so that's kind of how we think about the product and the value we add.
Talk to us about the IPO. Come on, give us some news here, Phil. Are you looking? What are the conversations around New York, London? What is the update there and timing? Next year it's going to happen, right?
So we've always said we want to list the business. That's not changed. We're obviously taking various
Is next
steps.
year a rational? Does that seem a reasonable time frame?
I would love to say that that's going to be the case.
Yeah.
We think that 18 to 24 months is a very reasonable time frame for us.
Okay.
We're obviously taking all the appropriate steps in that direction.
Is London seriously in the mix for you?
I would say absolutely. This is a UK business. We've built the company here. We would love to list the business here. We've just appointed Mark Wilson to the board. We're really excited about having someone with his credential join us.
But do you need the LSE to do more to win you over?
And we have publicly said we chair the Unicorn Council with Innovate Finance. We've publicly put forward a bunch of things that we think on the policy side need to be tweaked and changed to incentivize companies to stay and list here. However, this is only one of the criteria we will consider when we compare the US and the UK. Okay. And a lot is changing, right? We're going to see the election coming up in the US. In the next 6 weeks, we're going to find out what policy looks like here in the UK. And at the same time, our company is growing 100% year over year. It's completely changing. So, we certainly believe UK, US for us, both are options, and we're going to make the best decision at the time.
Okay, Philip, thank you very much indeed for joining us in the studio with the update coming through from Zilch. Of course, Philip Belamont, CEO and co-founder of Zilch. Now, coming up, looming rate cuts, talking of interest rates and US politics, which we also touched on, of course, putting cryptocurrencies under pressure. We're going to take a closer look with the founder and managing director of Bitcoin-focused venture capital firm Stillmark. That's coming up. This is Bloomberg. Welcome back. Now, Goldman Sachs is warning of a 0.5% hit to US GDP if Donald Trump wins November's presidential election. The bank's economists blame potential higher tariffs and tighter migration policies under the Republican candidate. Goldman says GDP will grow slightly if Kamala Harris wins and the Democrats secure both chambers of Congress. A big if, of course, on both those fronts. Surging poll ratings, meanwhile, for Kamala Harris and soaring odds the Fed will soon start cutting interest rates is dealing a double blow to the so-called Trump trades, and that includes crypto. Let's discuss this with Alyse Killeen, managing partner of Bitcoin-focused venture capital firm Stillmark. Alyse, I think you and the company, you and the organisation, of course, investing across the space with a particular focus on Bitcoin. What do you see as the catalysts for the biggest cap crypto out there in terms of the weeks and months ahead? Is it politics? Is it the Fed? Or is it other fundamental factors at play within the ecosystem?
In the short term, we're seeing the impact of politics and uncertainty ahead of the November election. We've seen August be a month of consolidation after significant price changes earlier in the year. And that's typical of Bitcoin in this part of the cycle. Now, what's ahead for us is much more important, and that is that Bitcoin is, of course, gaining in adoption and acceptance as a store of value. It's also matured and gained market share as a means of exchange. And finally, we've seen crypto activities that became popular and saw a sustainable audience in the crypto sphere begin to move to Bitcoin technologies as they mature. That will all be a tailwind for Bitcoin and should be reflected in the price.
On the political line, we know that Trump and his team have kind of been leaning into the crypto space, making a play there to win over that sector, and as they would describe it, turn the US into the crypto hub of the world. To what extent would that be a catalyst if Trump were to win in November? What are you hearing from some of the companies that you invest in, some of the players in the space, in terms of their anticipation on that front?
From our perspective, this is less about crypto specifically and more about the new administration's sentiment towards innovation. And so what we want to see as Bitcoin investors is an administration that is really thoughtful around regulation and preserving the value that Bitcoin technologies can provide to the end user. And so to that end, what we hope to see is a thoughtful approach to both how Bitcoin is regarded as a store of value and also as a means of exchange. What that means practically is that the value propositions be maintained and that regulators regard those and don't try to overstep. And so, for example, Bitcoin as a store of value, self-custody is quite important. It's a native part of Bitcoin's value proposition, and that should be maintained. When it comes to payments, what's important is how money transmitters are defined and regulated. And we would push for that or hope to see that from either administration.
What are you seeing in terms of your LP appetite for exposure to crypto? Are you seeing any hesitation? They want to be channeling those funds towards Gen AI. If you'd invested in Nvidia year to date, you'd be sitting in a much better position than if you'd invested in crypto, or at least Bitcoin, up 30% year to date versus the gains of Nvidia, which far outstripped that year to date, even despite the sell-off we've seen in the last 3 days. Are you seeing any caution in terms of the fund flows from LPs from crypto into Gen AI?
Well, Bitcoin technologies are relevant to generative AI and other large trends that major asset allocators are seeking exposure to. So Bitcoin payments, of course, are applicable to generative AI. Generative AI will need a payment rail that can accommodate microtransactions at scale. And Bitcoin's payment network, the Lightning Network, is ready to do that. Today, Bitcoin's payment network, Lightning, can process multiple thousands, if not more, transactions per second, as low as 0.006 of a cent. And what that means is that it can be an effective partner to AI scale transactions online. But Bitcoin is also applicable to other nationally relevant and globally significant investment trends like the energy transition towards renewables, where we've seen Bitcoin mining be able to fill the troughs that exists between peak supply and low demand periods, which means that new energy generation projects have an opportunity to monetize in a more stable way, and investors can, of course, see a quicker return on capital.
Alyse Killeen, managing partner at Stillmark, on some of the factors feeding into the moves around crypto, with a particular lens, of course, on Bitcoin. We appreciate your time and insights. Thank you. There's plenty more coming up. We're going to break down the data out of the US and look ahead to the JOLTS numbers, the job openings, later today. Stay with us. This is Bloomberg. Welcome back to Bloomberg. Welcome back to Bloomberg Daybreak. Some updates coming through. There's a big reshuffle happening right now in the government of Ukraine. This, by the way, after but not necessarily linked to a very significant attack that led to the deaths of around 51 people in that country, a Russian attack. Not the two necessarily linked, but there is a significant reshuffle happening, and one of the big names to resign, according to Lines Crossing in the last few minutes, is Dmytro Kuleba, the foreign minister, former foreign minister and former deputy PM as well, up until 2020 of Ukraine. Then he took on the role of foreign minister, and he's been travelling to countries like China recently to rally support for Ukraine. He has handed in his resignation. We'll keep across this unfolding story for you. A significant reshuffle in the government ranks of Ukraine. Let's get back to the data story. You saw the manufacturing data out of the US again, raising concerns about a slowdown in that economy. 5 straight months of contraction. 47 was the handle coming through in terms of manufacturing. A slowdown in orders, export orders as well. That again leading to concerns about the softness in the manufacturing sector. We have the jobs data, the openings data, the JOLTS data crossing later today stateside, with Bloomberg Economics expecting that the ratio, which we know the Fed scrutinises, will shrink again from 1.2 to around 1.5 in terms of the ratio between vacancies and job hunters. That, of course, has consequences potentially for wage demands and inflation, which is why it's scrutinised by the Fed. So look ahead to the JOLTS data later today. The opening trade will bring you analysis on all that front and the market sell-off we're seeing up next. Stay with us. This is Bloomberg.